Hey guys, this is Andrew for TRENDLINES.com. So I used to be a professional trader for a bank, and I'm right now, guys, a professional trader for my personal account. So it's a new start for me, and I'm also doing some YouTube videos. For those who are watching my video for the first time, I started 6 months ago, guys, and I like to use technical analysis and to update you guys on my favorite stocks, which are for now GameStop and AMC, but it can be anything else. And I'm here to share the knowledge that I acquired during my career and to show you guys all the tools and techniques that I like to use to make money on the markets. So in today's video, I want to make a huge update, guys, on AMC. Let's get into it. All right, guys, I'm very excited. It's a new start for me. So I'm gonna keep doing this daily updates. I'm also, creating for you guys a big course that where I'm gonna put all the information that I have about trading that I acquired at work, all the techniques, everything, So I'm doing this for you guys. I think it's important that some people, share this knowledge, from the professional industry to the retail investors. So I'm here for this. And I'm gonna show you guys what I can do with it on AMC. So in my last video, I was showing you my different scenarios. So let me just remind you quickly what is happening here. So my preferred scenario is this one. So I'm going to keep this one here. We are having here a triangle, guys. All right. We are having here a triangle. So let me just show you once again what are triangles. So here, 1, 2, 3, 4, 5. This one, let me put it in yellow. All right. Okay, we're having a triangle here, and look what is said about triangles. So this is the ELLIOTT wave course. This is my Bible, guys. It's where I learned most of what I'm doing here. ELLIOTT wave basically is the last step, guys, to do, trading based on charts. You need to understand all the other techniques. The basics are trend lines, moving averages, and then you go step by step. You start to use fibs with retracements, projections. Then you start to combine it with indicators such as RSI or MACD to find divergences. And finally, guys, you associate all of this with this theory. So everything I said before is not in this book, but everything I said before is what I'm showing you guys in all my videos. And when you associate all of this together, you come up with the kind of analysis that I'm making. And guys, for those who are following my videos for some time, you know that it's working well. It's working well. It's giving me good targets. This is how I found that we're going to go to 35 first, then reject it to 26. Exactly the way it happened here. Then we went to 65, 75. This was as well an area I found with fib extensions. And right now, guys, we're having this triangle. So this is what I wanted to show you. I showed you this already in my last video, but it's good to see things a few times, guys, because remember this. Triangles nearly always, all right, as far as I'm concerned, I would say always. The nearly here is like, I don't know, I've almost never seen a triangle in the last position of an impulse, but always occur in positions prior to the final actionary wave in the pattern of one larger degree wave. So for example, in an impulse, all right. So this is what we are having here. 1, 2, 3, 4. So we're gonna have 5, guys. We're gonna have a 5. I almost can guarantee it. All right. I mean, ELLIOTT can guarantee it. I'm just the one that is speaking for him because ELLIOTT is dead, guys. He was a very famous investor in the 1930s and he did amazing things. He won a competition of live trading where he just beated all his competitors by far. He made around 400% in a matter of months on the market with real money. And from there, he explained everything in his book that has been since then rewritten by Preston Frost. And this is what I'm having here. So this is, guys, amazing information. And I sum it up for you guys on the link in the description of this video. So just click on it and you're going to see, guys, how I do these things. Anyway, so here we going to 135, I think. And let me show you a bit with a step back how this is looking, guys. I mean, this is nothing that incredible, guys. If you go on a weekly time frame, you see we were trading at 35 in 2016, guys. So I know here there was the COVID, guys, but there was so much money printed. Now there is so much bullish momentum in the stock that going to 135 is nothing, guys, that is that crazy for me. It's just a bullish stock that is doing well with investors that believe in the company. And for me, this is all good. This is all good. And I can even see some more moves up, guys. I really don't think we're gonna trade below 35, but once again, one of my scenarios, we go to 25 and then we strongly bounce back. I think the stock is doing very, very well, guys. Don't listen to analysts. They have always been wrong, guys. Remember on Tesla, analysts were saying when Tesla was at 300 that it's overvalued. Now Tesla, you know, it went to 3,000 and yet, you know, from 300 to 3,000 times 10 and then divided by 5, there was a split. So now it's quoting around 600. So it's like old 3,000. And analysts have been wrong the whole way and they are wrong here again. So let me show you guys my ultimate scenario. This is 1, this is 2, this is 3. Okay, I have one here, and don't be scared, guys. Don't be scared. I have one here too. All right. So don't focus on those levels. I'm not here to, you know, just give stupid high levels. I'm just here to do what I know how to do, which is use ELLIOTT to analyze moves up. So I'm just telling you guys that I have a few more fifth wave to come. Of course, at a certain time, the price action would be so high that it's going to be tough for a stock like AMC to keep going higher. But I'm just saying that we have plenty of room on the upside and that this move here to 135 that many people consider like crazy is not crazy at all for me. When I look at the charts, guys, once again, you saw how it was looking on the weekly time frame with a step back. It's not crazy levels. I mean, you want to look at Tesla chart. This is crazy and this is holding and this is going much higher, by the way. I mean, it's all good for me. So this is what I wanted to show you guys. And I want to show you some cool option strategies as well here, guys. All right, let's go here. Yahoo Finance, where I get all the information. This is a very nice database, guys. Let's take some options and let's check what cool option strategies, because guys, the fifth wave is coming. It's probably going to come before June. So let's go on the June maturity. Let's see what we can do here, guys. So as usual, I copy paste this. I put this information here, guys. This is the average. Otherwise, you might have some weird numbers. All right. Okay, guys. Volatility of 450%. That's insane. Totally insane. All right, guys, 460%. So here, guys, the best for me option strategy that we can make here is the one that is here, guys. You know, once again, I'm going to show you the different steps that you can make. You can buy, for example, a 70 strike call, all right, because you think like, yeah, AMC can go to 100, but if AMC goes, so my scenario is AMC goes to 135. So here you make $5,000 US if AMC goes, or okay, $6,000 US if AMC goes to 135, which is beautiful, guys. All right. So this is actually a nice strategy as well, but you can make better than this. So you can then sell, for example, the 135. How much is it? Depending on how much it costs. You see, it costs, guys, you know, it costs $100 US. All right. So for $200 US, you can make a very nice strategy like this. You start to make money above 70. But guys, if we break the triangle on the upside, we're going to go much higher. So this is a nice strategy you can make. The strategy I would make, I would go to the higher strikes. I would buy the 100. I would cap it here and I would spend more. Okay. So now for $290, if my scenario happens, it can go to $15,000 US. So just look at this, guys. In terms of performance, this divided by this, okay, times 60, guys. All right. So this is the kind of cool strategy you can make. Once again, remember that those very high volatility strikes, you want to sell it. You don't want to buy it. So that's why I buy here, I sell higher. All right. This is what I learned at work, to sell those high volatility strikes. So this is a strategy you can make. Another thing you can make, guys, if we go, for example, if you have shares and we go to very high levels, you can just consider capping your performance, capping your P&L. All right. So just sell one call option with 100 multipliers. So it's 100 shares equivalent when AMC goes to 135. If you are long shares, don't hesitate, guys, to sell this call options if you don't want to sell your shares. So you're just capping your performance. This is a very smart move because you take advantage of this very high volatility that you can find here. 450%, guys, it's a lot. All right. It's a lot. In terms of daily move, you just divide by 16. So it's 28% a day, which is fair, but it's the kind of cool strategies that you guys can make. And keep in mind that we're probably going to develop higher soon, and that there is a lot of gamma on this June maturity. So I know you guys heard many times that on the expiry days, stocks can move a lot, but guys, this is true, especially when you have that many options. Look at this, guys. 8 million equivalent shares on the 145 strike coming from the June maturity. This is something that can blow up some market makers that are going to be forced to buy at crazy level. This can create a squeeze, gamma squeeze. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.